Good evening, everybody, and thank you for joining our webinar, Access to Capital. My name is Jennifer Kenny. I am a project coordinator over at Suffolk County Community College Entrepreneurial Assistance Center. Tonight, we have Jay with us, who is a professional assistant. He is our tech guy, so you hear him, you see him in all of our webinars. We have Kenya with us, who is also a project coordinator. She also happens to be our MWBE, Minority and Women-Owned Business enterprise specialist. And we have Giovanna Bracchi with us, who will be presenting our presentation tonight. Giovanna is the director of La Fuerza Unida. This is a nonprofit organization serving Spanish-speaking and low to moderate income persons residing in Long Island. La Fuerza Unida, sorry about that, is a multi-service agency for youth and adults and is part of a housing counseling agency as well as community housing development organization. They hold awards for their great service in the Latino community. La Fuerza Unida's mission is to promote sustainable economic growth in Long Island by providing minority women-owned businesses, enterprises access to capital, business development services, and other tools which will create jobs, community wealth, and long-term prosperity. Sorry, I'm tongue-tied tonight. As a microlender, not only does La Fuerza Unida offer access to capital, it also provides the small business communities of Long Island with the education, skills, and financial tools necessary to create a better economic future for their families and communities. Giovanna joined La Fuerza Unida in 2009 and became the executive director in 2012. So without further ado, I'm going to turn you over to Giovanna.
Thank you, Jennifer. Good evening, everyone. Tonight's webinar will be on access to capital. I just ask for you to give me 1 second so that I can share my presentation. Jennifer, you could see this, correct?
Yes, I can see, and I will also be monitoring the chat for you. So if any questions come up, I'll let you know.
Great, thank you. So let me play this from the beginning. So here we are. Again, my name is Giovanna Bracchi. I am the executive director here at La Fuerza CDC. La Fuerza is a community development corporation. La Fuerza in Spanish translates to your strength. So our caption is your strength for success. Again, La Fuerza Community Development Corporation was established in 2001 as a nonprofit 501c3. And later in 2004, we were certified by the US Treasury as a community development financial institution, CDFI. I'm sure some of you hopefully have heard of CDFIs doing great work throughout the pandemic, especially. Our mission is to really promote sustainable economic growth on Long Island by providing small businesses, those primarily who are owned by minority and women, resources, business development, access to capital, lots of wonderful things. Here is our 3 programs, really. Technical assistance, which is business development. We do this by either private counseling, which we do through Zoom, or group training, which we have group training in all different, areas of growing or starting your business. Many different business topics. Our second program is our access to capital, which is our micro loan program. This is a benefit of our certification. We're certified to do micro lending, and this is the particular program that I will speak about tonight. The third program that we added during the pandemic is the credit counseling, the financial empowerment program. This is a private credit counseling that is free for business owners and their employees. The services are both in English and Spanish. So let's get right to it. This is our loan program. We have micro loans. up to $50,000. The interest is 3% to 8.5% based on the risk and the capacity. And what we mean by this is if you are just starting out and you come to La Fuerza because you're opening your business and you're a little bit short on capital, the risk is pretty high. And this program is for businesses that are just starting out. This program is for businesses that do not qualify for traditional lending. So we understand that, they're riskier loans than your traditional lending. So your interest might be around 6, 7, or even 8.5%. If you're an existing business and you're expanding, or you need additional capital for inventory or a machine or equipment, or you want to get a loan in order to pay off some high interest debt that the business maybe has, maybe some credit cards. Those are always high interest. If you want to refinance some debt, then your interest will be lower because you have been in business already for a year or maybe 2 years. So that's what I mean when I say based on risk and capacity. The loan is a fixed principal and interest payments. We can stretch out a loan up to 10 years amortization. So for instance, if you borrow $40,000, you might think, well, I would like to pay it off. I don't want to carry this debt for 10 years. Let me take out a loan for 5 years. At $40,000, your monthly payment may be high. It may be in the 400s. You can stretch it out to 10 years and make that monthly payment a little lower. We don't have any prepayment penalties. So if you want to pay on a monthly basis additional principal, or let's say you're on year 2 or 3 of the loan, and now you want to pay more money towards the principal, you can shorten the length of the loan. So it might come out to be a 7-year loan rather than a 10-year loan. The only fee we have is a 1% closing fee, which maxes out at $500 if you borrow $50,000. So again, this is a very affordable loan. It's really, we call it community lending. It's a community program. It's for small businesses that don't qualify for traditional lending yet. It could be that the owner's credit score is not, great. This is also a loan to stop you from really getting into that high interest credit card debt in order to assist your business. The qualifications are simple: small businesses on Long Island, MWBEs, DBEs, women-owned businesses. We like to focus on minority small businesses. And the micro loan now comes with free credit counseling, which is the program I just mentioned prior, which is private. It's through a company, and it's really just to help you manage debt. The second loan program that we have here came out during the pandemic, and it's really a great little loan program for women. It's up to $3,000, 0 interest for 36 months. We call it the Power Tech Loan because it's for women and the loan needs to be used for technology. This is so that, small businesses like hair salons or nail salons can have a little bit of technology. We saw that a lot of those type of businesses during the pandemic had a hard time accessing social media and the SBA programs because they needed technology. They weren't, so tech savvy. The other loan product is through the assistance of New York State Empire State. It's our revolving loan fund. Again, it's a micro loan. So just so you know, anything under $50,000, it's considered a micro loan in our industry. This revolving loan fund is up to 25,000. So if you're looking for a little less, the interest is between 3 to 8%. And you can stretch it out 3 to 7 years. Qualifications needs to be 51% minority owned. A small business with less than 20 employees. Obviously, it must be located on Long Island. That's our service area. Then we have those individuals who are not looking for a microloan, those small businesses that are looking for an amount over $50,000. We can work with you and collaborate with another CDFI, so another nonprofit just like ours. There's many of them in the city, a lot larger than ours. So we can collaborate with them on a loan for your business. That's if you're looking for an amount higher. Obviously, we will take a look at the collaborating CDFI's requirement for the loan, but we'll go through all of that depending on what you need. We would do an assessment at the beginning. You know, if you're looking for a loan, we would sit down, we would do a one-on-one, and we would just do a needs assessment. So where are you? What are you looking to do? What's the loan for? And then take it from there if we need to do a collaboration.
We have one question for you, Giovanna.
Oh, sure.
Okay, Delta asks, do the owners of the business have to be personal grantors, for the loan? It says in parentheses, even if the business has good and established credit.
Yes. So because it's, it's just the way our loan is set up, we ask for a personal guarantee from the owner. Yes.
Thank you. That's it right now.
Okay. So requirements for a loan package. It's pretty simple. So we have the application, which is 3 pages. I will go over that with you. And we do ask for additional documents along with the application. So these are the required documents. 3 years of business tax returns and 3 years of personal tax returns of the owner or owners. Now, a lot of people, panic when they see 3 years business tax returns. I just opened 3 months ago. Obviously, whatever you have, if you're in business for a year and you did a tax return, will take a year. That's really for startups. We're looking at, and I highlighted it, projections, right? Or if you're open 6 months or 8 months or anything under a year, we're going to look for a profit and loss. We want to see how your business functioned for however many months you're open. So when I say 3 years, that's for an existing business, but definitely 3 years of personal tax returns for the owners. Another 3 is the bank statements. We'll ask for 3 months of personal bank statements and business bank statements. It is a requirement that the business have a business bank account. So that's one of the requirements. So we will ask for 3 months for the owner and for the business. The projections are for startups, or the projections are also for if you're an existing business and you're opening a second location and you need funding. If you're an existing business and you require additional equipment in order to produce more, we want a projection on that, at what the cash flow and the revenue will look like. So the projections are really important. The profit and loss, again, if it's, the profit and loss can also be for an existing or a startup, because if you're coming for a loan, let's say now in May, we're going to ask you for the first quarter profit and loss to see how your business functioned these first 3 months. So it's for a startup and an existing business. A business plan, which is great. I think every business owner should at some point do their business plan. If not at the beginning, then definitely after this pandemic, right? What does your business model look like? What does your business look like after what happens? How does it function? So we want to read about your business. I also want to mention at this point that our loans are decided by a loan committee. So our loan committee is made up of 8 individuals that are, business owners. It's a combination of business owners, bankers, individuals that are involved in the chambers throughout Long Island, CPAs, realtors, and they basically they do an assessment on the business and they look at the benefits of the business in our community. And that's how they decide. Of course, they look at all the documents that I'm talking about, but it's not decided based on credit, just credit, or the financial status. And those individuals like to read a business plan. So we do ask for a business plan. It doesn't have to be like extensive. You don't have to write a book, but tell us about your business and where you're at, where you want to go. So a business plan is one of the requirements, especially for startups. 2 forms of ID. I think that's pretty self-explanatory. That's for the owners. Proof of ownership, which could be if you're incorporated, it's the certificate of incorporation, articles of organization. If you're a DBA or a sole proprietor, it could just be you registering the name at the county level. Also, your EIN letter from the IRS. So your EIN is your employer ID number for the company. So we require that number, which comes to you in a letter from the IRS. If you are renting space, commercial space, then we require a lease. If not, it's not a requirement. The counselor will sit with you and go through this list, and anything that is not for you, they will cross out and explain to you that they don't need it. If you are renting space, then obviously we need to make sure that you have liability insurance, so we want a copy of that. Proof of address for the owner and the business, so a simple utility bill will do. Any licenses required in your industry or permits for commercial space. Obviously, we're trying to secure the loan, right? Make it less risky. That's basically what any loan officer or lending agency is trying to do, is lower the risk of the loan. So if there are licenses that are required in your industry, we want a copy of that. Let's say you're a home-based daycare. We want to see your license. We want to see your permits. If you're a brick and mortar, if you rent space, we want to make sure, for example, if you're a restaurant, that you have your CO. Because we need to make sure that we're lowering the risk and everything is up to par as far as the business. And then a list of use of funds. We want to know, what is it for, which is pretty simple.
We've got another question for you.
Sure.
Okay, it says, what are the interest rates on loans and the max term?
Okay, so back to page 1. So here are the terms: up to $50,000, interest rate 3 to 8.5%, and up to 10 years. 1% closing fee and no other fees, no prepayment penalties, nothing. The power loan, which is for women, used for technology only, is up to $3,000, 0 interest, 36 months. And then this is our New York State revolving loan fund, up to $25,000. The interest is 3 to 8%, and it could be up to 7 years. This is for minority-owned businesses only. If you're looking for anything over 50,000, then you need to come to us, and based on the collaborating CDFI, we'll tell you the terms. I hope that explains it a little better.
We have another question asking if your loans are limited to Long Island.
Yes. If you're based outside of Long Island, if you're in New York City, the Bronx, Westchester, you can still reach us. As a CDFI, we belong to a CDFI coalition, which is all the CDFIs across New York State. So you can reach us and I'll put you in contact with a CDFI in that region. There are CDFIs across the US as well. We belong to a network nationwide as well, so we can put you in contact with anyone outside of the area. Okay, so those are the required documents that we will need, supporting documents to the application. So how do you prepare for a loan? We always say be prepared, because you never know when you're going to have to borrow, when that opportunity is right around the corner and you need that extra capital to get you going. Let's say you're bidding for contracts, you're in the procurement process and you win a contract, right? Now you have to put in your order, now you have to execute that contract. So you might need that little bit of startup capital to get you going. So we always say prepare. Like I said, our application, which I'm going to go over in a minute, is 3 pages, which is basically asking you information about the owner's financial information and the business. But also in lending, you should ask yourself these questions just to be prepared. How much do you need? What do you need it for? When do you need it? Right? Where's your business located and how long have you been in business? These are some of the questions that we'll ask. Do you have cash flow? Do you have any profits? Are you breaking even? Or, if you're a startup, we'll work with you on the projections. Do you have employees? Do you have collateral? We do have a program that helps with collateral. So we don't require a lot of collateral. Do you have any other debt? Just be honest on any application for lending. Just be honest on the debt. What is your credit score? Maybe start working on your credit score. Our lending is not based on credit score, but it's always good to have a good credit score for many other lending reasons. Debt to service ratio is something that's misspelled that you should all be aware of. Ours is 1.25, which means that for every dollar that you have in debt, you should be earning $1.25, $1 to take care of the debt and the 25 cents as extra. But that's getting a little more technical here. But we always say just be prepared. This is our application. So like I said, it's 3 pages. I'm sorry, I was trying to add it to my PowerPoint. So the first page, it is a lot of questions. It's really not compared to some of the applications that I've seen. We did modify it a little bit during COVID because we wanted to see how COVID affected small businesses. But the first page is your personal information, just ways that we can contact you. Business information, again, pretty basic questions. Business tax ID, how many employees do you have? Your business structure, the location, is it home-based, storefront? When did you or when will you start operating this business? And just a very brief description of the business, very brief. And then here is the ownership, the name, title, and the percentage. And we move on to the second page, which is the financial information, type of accounting records, do Do you have it done by an accountant? Do you do it yourself? Oop, moved ahead too much. And then we want to know your business income and your personal income, as well as the business expense and your personal expense. This is just simple, just to see where you stand. If there's anything in here that we didn't cover, I would say just add it. If there's something here that doesn't pertain to you, just, put a 0 or a line across. For startups, if you are just starting a business, meaning it's not open, we recommend that you have additional income or supplemental income. When I say we, I would say pretty much in the lending industry. It's called global cash flow. You definitely want to see that there is some kind of supplemental income so that you're not draining the business at the beginning. And then financial information continued. Basically, we just want to know if there's any debt for the business, if you're financing something else. We have companies that, they had a van, they were financing that. This is where you would put it. And then here, we just want to know about the loan. How much are you requesting? What's the minimum loan request that you need? And what we mean by that is a lot of people come and they say, I need 50,000, but they can really just, get everything done with, let's say, 30. When we have our loan committee and we are looking at your business and all of the financial information, if the loan committee feels that your business doesn't yet have the capacity to borrow 50, because the business cannot carry the loan, then they ask for what's the minimum amount to get you where you want to be. And if they see 30, then they would base their their decision on that. So that's why we ask for a minimum loan request. The third page is our demographics and COVID questions. So we added this, obviously during the pandemic. If you're an existing business, describe how the pandemic, impacted your business. Did you apply for the SBA assistance? And if so, how much? And then obviously the social economic, we are a nonprofit. We do get funding in order to get our information out and do these programs. So we want to know, who are we serving? So this is just basically for us, for our tracking. Your name is not attached to any of this information when it goes into our system. It's just basically a demographics count. So that's pretty much it. We do run a credit report. Like I said, our loan product is not based on a credit score. But we do pull a credit report to ensure that there's no, really outstanding debt or any tax liens or federal debt that's owed, because this is a program, federal program. So that's the 3 pages. So again, prepare, because you never know when you're going to need to borrow. Be organized. I know that a lot of small business owners are so occupied in their trade, and you're just wearing all these different hats and doing all these different things, and you're working really 24/7 when it comes to your business. But try to spend some time and be prepared. After the pandemic, during the pandemic, we saw that a lot of people were struggling getting all their stuff online in order to apply. So that's why we have this little computer here, as we say, get ready. Do you have an accountant? So these are some of the questions that you might want to ask yourself. Do you have an accountant? Have you filed your taxes? Again, if you haven't, or if you have any tax liens, you can't apply to this program. Do you have all your corporate documents? Where are they? Do you have a business plan, or have you done a business model? Do you have projections, profit and loss? Where are your documents? Make sure that you take the time, maybe just do one at a time whenever you can, and upload them and have them ready in your computer. Get clarity, like what do you need the loan for? Sometimes people just come to us and they say, I need working capital, but we still need to know, like, for what? What is it that you want to do with your business? Your business plan, you should, when you write your business plan, you should write it clearly so that, always think about the reader, right? Who is your audience? Sometimes people give us business plans and they're a little bit hard to understand. And does it make sense? Does your business, have clarity? Does it make sense? Can you repay the loan? Can you carry the monthly payment? So if you're awarded a loan of $50,000, and let's say you have a $500 monthly payment, can the small business carry that loan? Can you repay it? Definitely want to make sure that you think about that. Plan ahead. Are you ready for a crisis? We added this obviously after the pandemic. Always plan ahead. And what we're doing now is we're asking you to think, if you have a small business already, what does your business model look like? Is it hybrid? Did you take the old and mix it in with the new, or whatever you learned after the pandemic? We sure did. We do a lot of counseling online, which works great. We're able to do a lot more appointments than we did before because of the technology. So it's nice to revisit your business model and see, what works best for you now, what to expect. So the loan process is, you sit down with a counselor, they go over the application, they tell you what the requirement documents are for your business. If you are a startup and you need to do some business development and you need to do some work before you open the business, that's not what I'm talking about here. Obviously I can't say how long that will take, but if you are ready for lending, again, the counselor will say, this is your list of required documents. Once the counselor gets a full package and the underwriter says, okay, I have all the documents, you will get an email saying, we've received a completed loan package and your loan is now with the underwriter and going through a review. From that point, it could take up to 4 to 6 weeks to get your loan, to get the decision. It has to go through underwriting, and then we have to do our report and send it to the loan committee. These are volunteers that meet after hours. So I like to give them a week to actually read your business plan and review all of the documents, review the application, and then we meet if they have any questions. If you do have a commercial space, we will do a site visit to look at the location. And then at that meeting, they will decide and we will let you know the next day. Once they come out with the decision, it's very quick. We email you the closing documents, and then we wire you. Once we get the closing documents back and notarized, we just wire transfer the funds to your account. So it does take weeks. It's not automatic, because this is not automatic underwriting, where everything is based on numbers like credit score and cash flow. This is really a community program. So it does take a little bit longer, but again, it's for individuals that, can't really qualify or get a great rate with a traditional lender.
I've
So
got a
that
couple
is,
questions for you.
yes. Okay, that's the end of our presentation. I always say, follow us, follow us, follow us. We're on social media. We have our counselors that can help you, again, with the application and all the required documents. We do that in English and Spanish. available in both languages.
All right,
Yes,
so
and
our
yeah.
first question is, can a
Okay.
nonprofit organization apply?
Okay, so um, I'm going to have to say maybe, and I'll tell you why. It would have to be the unrestricted funds because a loan should be for a for-profit business. In other words, you need to be able to pay the loan back. So a nonprofit usually gets grants to do a program, and there's no profit in that. So it would have to be like maybe like I don't know, fee for service or unrestricted funds on their end. So I would have to run it by the committee. We haven't done it, so I apologize. It's only been so far for small businesses, like for-profit businesses. But I'm not going to say no because we would have to just look more into it.
Great, thank you. Our next question is the business's social media profile / LinkedIn, etc., reviewed as well for this loan, for any of the loans?
Yes, so under the due diligence, I think that's one of the items that the underwriter does is, they just do like a business search.
Okay. And then can you share what underwriting designates as a max DTI monthly ratio?
I thought we mentioned that it's the 1.25, the debt to service. Yeah.
Okay, that was on the first page, correct?
Yeah.
Yeah. All right, and any more questions? The floor is open for everybody. So I'm just going to be keeping an eye on the chat. If any more questions pop up, Jay, how do we look on Facebook? Do we have any questions over there? Let me just pop. Yeah, Facebook looks clear right now.
I would also say if anyone is applying for lending at any of the major institutions like Bank of America, JP Morgan Chase, Capital One, Wells Fargo, you can always come to us if you need assistance with the application, if you have questions about their list of required documents, or if there's something that they're talking to you about that you're not quite sure, you can always come to us and, we'll sit down with you and explain it all. Because ultimately, yes, we're a CDFI, we're a lender, but we are a nonprofit, right? So we'll try to provide you as much education, financial education as possible. I also want to mention that you don't have to apply for lending in order to take advantage of the credit counseling. Yes, we are, now requiring it for every loan that we do. We require credit counseling, but anyone can take advantage, any business owner can take advantage of that program as well.
Okay, thank you so much for that. We do have a couple more questions. We have a
Okay.
question on, I build and fix houses. Can I apply for a loan as well?
You build and fix houses. I am going to say yes, as long as you run it as a business, as a for-profit business. Again, we would have to also take a look at, again, all the financial information and your business plan. It is not for purchasing homes, obviously, and it's only up to $50,000. So it's, it's impossible to do that as well here on Long Island. But I'm going to say yes.
Right, and Anthony wants to know, what is the approximate end-to-end cycle time from the time the form is filled and the documents are submitted to the time when the loan is granted?
Sure. So as I mentioned before, once you get the email, you will receive an email from the underwriter saying, we have a completed package, an application, and it's now in review. From that point, it's anywhere between 4 to 6 weeks. Before, that was like the hardest part, is working with the counselor. It's, reviewing the list of required documents. A lot of people are like, yes, 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 I understand it. And then it just takes them a while to actually gather all the documents and submit the application. So, we said once we have a completed package, that's really when the time starts ticking, because that's when we start to review it and do all of the due diligence. Yeah, so from that point on, it's anywhere between 4 to 6 weeks. The payments, like I said, is through ACH. So we'll transfer the funds to your business account, and then we'll automatically enroll you on ACH payments. We'll give you an amortization schedule so that you know what every payment is for the life of the loan. Again, it's a community program. So I just want to say, like, for example, during the pandemic, we put all of our clients on hold. We froze all of our accounts, loan accounts, and gave our clients enough time to really get back on their feet before we started up again.
I don't see any more questions at this time. I'm just going to wait another minute, see if any more pop up.
Sure.
I'm also going to be putting the center's contact information. This way, if anybody wants to reach out to Giovanna, if you don't copy down the information here, you can always contact us and we will connect you guys as well. Chances are, if you are on the webinar, you already have our contact information, but I'll give it to you again anyway.
Yeah. Yeah, like any questions, sometimes it always happens to me. I attend webinars and then an hour later after I leave, I'm like, oh, I should have asked that question.
I'm just putting the information on the Facebook Live as well.
Sure.
All right. So it looks like we don't have any more questions.
Okay.
So at this moment, we're just gonna wrap up. I wish everybody a good night. Again, our contact information is in the chat box. Majority of you should already have it. You can always reach out to us, and with any questions you have, we can connect you with Giovanna on a later date so you guys can work together, get your loans, and any other questions you guys have, definitely reach out to the center and we will point you in the right direction.
And I'm going to stop sharing.
Okay. So Jay, we can end the recording now.